Shares of Splunk higher 1.5% after the company just reported Q2 results, beating expectations on the top and bottom lines. Had an adjusted loss of 62 cents a share versus estimates of a loss of 69 cents. Brought in $605.7 million in revenue. Expectation was $563 million. Splunk CEO Doug Merritt joins us now ahead of the earnings call. Doug, thanks for joining us. Tell us the story, because you're going through a transformation. You're switching to subscription and to cloud. What are you seeing? Give us some color behind the numbers.
First of all, thank you for having me on, Sarah. I'm thrilled to be here. It's another really good quarterly performance. We were really pleased across the board. As you talked about, we're going through a transformation to SaaS delivery and the ratable revenue that comes with it. All of these are multi-year transformations. We're now consistently at 50+% on cloud bookings. We're really pleased with our cloud growth rates. Our ARR came in at 72%. That's the 10th consecutive quarter of 70+% cloud ARR growth. Overall ARR, we're pleased with as well, 37%. A little bit over $2.6 billion, and nosing up on $1 billion in cloud ARR. So it's been an important commitment for our customers to be able to have an effective SaaS delivery, given the importance of digital transformation and cloud-based offerings. And we're seeing the results with customers voting for Splunk.
We don't talk about Splunk every day, Doug. So just give us a sense. There are a lot of software subscription cloud companies out there. Give us a sense of what differentiates you, what you're selling to these big clients like the big banks and the big companies, and why it's a growth market.
That's a very, very good point. And peeling back. So first of all, 92 of the Fortune 100 are using Splunk, and that's been a pretty consistent number for many years. We are experts at dealing with the very high volume, high variety, and high change rate of data that all these awesome silicon-based devices are throwing off. The core markets that we serve, although data can be used for just about anything, are the cybersecurity teams who are trying to keep all of our companies safe. They're investigating what's the health of all these devices and networks and data centers that we're operating against. The IT operations teams trying to keep these systems up and running. We've seen that beyond mission critical with the pandemic. And helping the application development teams who are cranking out all these awesome new features and functions so that we all can have these great experiences while sometimes we're allowed to go outside, sometimes we're back in sheltering in place during this pandemic. So we're a big data platform that provides insight and visibility for organizations using this convoluted data set.
You got a big investment from Silver Lake a couple of months ago. Talk us through, Doug, the rationale for taking that and the terms that came with it.
Yeah, we were really thrilled and honored to have Silver Lake express interest. It was a really effective set of interrogations, as you'd expect from Silver Lake. Good due diligence, done very crisply. And the thought process behind that was these transformations are difficult. And when we look beyond the transformation, look at Autodesk and Adobe and the other companies that have gone through it, very few of them, the stock overall performance becomes really, really compelling. But in the middle of that transformation, it's not always so obvious to investors the fundamental strength and what that outcome is going to look like. And by teaming with Silver Lake, I think they're very widely regarded as the best in the industry, certainly in the tech focus that they have. They're long-term investors. They're growth PE-oriented investors. We felt that was a really strong vote of confidence by one of the best in the industry on the fundamental health of Splunk. And then we got to add an awesome new board member, and Ken Howe is the co-CEO and co-founder of Silver Lake. So a lot of perspective that they're bringing from so many of the other investments that they have and the transformations that some of those companies have gone through that we felt could be of value to us at the board level as well.
Do you think Wall Street understands ultimately beyond Silver Lake your story, Doug? The stock has underperformed year to date and certainly is much lower value than some of the other companies in this space like Datadog. So what's the disconnect?
I think in today's environment, there are so many different options for investors that you guys do an excellent job of covering. And Splunk, companies in transformation like Splunk are, you just have to spend a little bit more time with the company and understand the fundamentals to really understand why over the next 12, 14, 18 months, that momentum continues. We've worked hard with stats like annual recurring revenue. Our dollar-based net retention rate on cloud customers is best in class at 129%. So we've done as much as we feel we can do to provide visibility on the fundamentals for the company. But there are lots and lots of alternatives out there right now. And it's up to us to keep putting together great quarters like we just had and providing increasing clarity on guidance and the opportunity in front of us so that people understand this is a temporary transition we're going through. And the company, we just guided to $3+ billion of ARR towards the end at the end of this year over the next 2 quarters. So that company is understandable to folks on GAAP and normalized metrics instead of temporary metrics like ARR.